Good afternoon, good evening, depending on where you are. This is Dennis Warburton with the Active Trend Traders. Welcome to Making Money Trading Stocks and ETFs. I think this is the last Friday in January 2016. We have made it through the month of January successfully. I'm very pleased. Typically, the first month of the year is tends to be a challenging time for me, but we basically have weathered the storm very, very nicely this year. We'll talk about that a little bit. I've got a couple of trade ideas that I'll pass on to everybody. No real setups, but it's something just keep your eye on. I want to remind everybody that all the materials presented are for training purposes only. Traders should always pay per trade any new method prior to the risk of your own personal capital. Past performance is not an indication of or a promise of future performance. Just remember that. Okay, here's a little bit about me. Scott mentioned, Mike Traeger. Mike Traeger is my research colleague down in Dallas, Texas. He and I have been working together since, going back to just about 2005 time frame. So a long-time friendship there. Remember, your job as a trader is to wait. Most people who like to trade, they think that their job is to trade, but no, it is to wait. For the best opportunities, money is made stocking and sitting, not being active and forcing a new trade each day and or each week. That's one thing that Mike does do a really great job of, is he's got specific signals and he waits until those signals flash, and then he goes into his gets into his position. So remember, the reality of trend trading in one is we want to identify the trend. We define the areas of interest or value. I'm redefining those, calling them bounce zones. That's where prices will tend to bounce either one way or the other way. We define the triggers, we define the strategies, and we define the targets. The only thing that we recognize, the only thing that we do control are when we enter and when we exit. And as Peter Brandt likes to say, never chase a signal. Never. There will always be another day, another market. If you miss a move, so what? And like one of my mentors used to say, the best trade of the year comes around about every 2 weeks. We've had a couple of really good trades so far this year. One, Netflix getting ready for earnings, and then BABA. Those of you who are those who did the BABA trade, congratulations. We did well in all three strategies on that one. So our objective of the Making Money Trading Stocks webinar is to basically provide timely, actionable intel review at the end of each week. We'll do a real quick market review, stocks and ETF performance, and anything that may be sitting up there. Are there any bonus trades? I'm not quite ready to call a bonus trade, but I think the next bonus trade we call is going to be it's going to be a good one, and it has to do with something that's shiny and a commodity. If you say spilled oil, you'll be wrong. Anyway, so as I said, we basically come out of the chutes. We've got some gains across all three strategies. We're up about 6.7% so far for the year. I know I've gotten emails from some of the folks who are saying, "Hey, I'm up, X amount in strategy 1, strategy 2, and strategy 3," and that's really great. It's really awesome. I love getting emails where people, are telling me how well the system is working for them and how they're trading it. So let's take a look at some. Here I am sitting at my desk with my Hawaiian shirt on, my University of Hawaii hat, very happy, and my screen. I'll have to blow that up and see what I'm actually looking at there. So let's take a look at the indexes and see how they are in fact doing. Well, here's the S&P. S&P continues to accelerate to the upside. Let's just flash on a, it basically has gone into, hyperdrive, parabolic, if you will, is what some people are calling it. How much further can it drive Who the heck knows? If we try to get a, oh gosh, I don't even know where to go and try to pick up a point for a fib extension. All we know is there is no overhead resistance on the S&P, and it is definitely well extended from its past pullback. I mean, it's way up there. What's going on though? If we take a look at it, one, very extended away from the moving averages. At some point, we will get a reversion to the mean. Now, up until this point, over the last few years, basically pullbacks into the moving averages have traded well, and so we kind of have to treat it the same way until we're proved differently. As you can see, TSI is above the norm. It's up here about the 70% level on a daily chart, and way above the normal range, which is down. It usually tops out at about 68, 66, and look, it's up there about 85, 86. However, we have gotten no sell sign candlesticks flashing whatsoever, and so all I can say is just we'll stand by and we will wait. Now, one thing that did take place over this, I think it was 2 weeks ago. Yeah, 2 weeks ago, right there. We did get a 3-line cluster on the market forecast. Now, that usually means that somewhere between 1 to 4 trading periods, which in this case, these are weeks. So 1 to 4 weeks, you would anticipate some sort of a pullback or at least a slowdown. And so that, if that works, that's fine. We shall see. As we get, acceleration of the upside, NASDAQ, same. NASDAQ did a little bit of slowing this week, as you can see. Bearish engulfing 2 days in a row, Wednesday, Thursday, however, and these bearish engulfing patterns that happen over the last couple of days are still in effect until this high is taken out. The high there is, what is it? It is up at 69.90, 92.91. And did we take that out today? And as you can see, no, we did not. We got 6991.71. So those bearish engulfings are still in play. However, on the weekly chart, as you can see, it's still pushing up to all-time highs. And what we have to do is we have to wait for the TSI to actually kind of tick down, and that'll give us a clue that we're either pulling back into support for a rebound, and that's the way we have to try it right now, or we would want a double tap where we came up and hit went back and tried to make up the new highs, and then basically has some negative divergence, kind of like we had here. However, as you can see, short and shallow have been the corrections. And let's see, Russell. Yeah, Eric, 3,000 on the S&P would not be a shocker. Would not be a shocker whatsoever. Russell having a little bit more challenge getting up to, I mean, it is making new highs, but it is lagging the other indexes. As you can see, we push back up. It is, in fact, bouncing off of the 8-period moving average. And so if you wanted to utilize that for a trigger to get into a Russell trade or an IWM trade and or a TNA trade, that would be the appropriate trigger on that. As you can see, the momentum just hasn't been behind the Russell the way it's been behind the other two indexes that we follow. So that's what we've got going on with the Russell. I'm going to be coming back to the charts in just a little bit, so hang on. I want to remind everybody that the seasonality that we're anticipating, the NASDAQ tends to drive sideways the first couple of months of the year and then get a bid. So we are seeing a little bit of this NASDAQ moving a little bit sideways over a couple of days, but still it is in gear to the upside. Again, until proven that it doesn't work, trade the pullbacks into the moving averages, the 820, or if it gets down to the 50-day moving average, which if this uptrend remains as strong as it is right now, it just won't get there. And so the 820 is, trade off of those on a daily chart. Here's the Russell. Russell basically same type of thing. Tends to be a little bit of a laggard in the first couple of months of the year, and then gets its bid into the March, April, May, into June and July timeframe. Then it'll pull back into the October timeframe for a sprint to the finish at the end of the year. Now, the seasonality. The chart that we're looking at does not have to look exactly like this. We utilize this chart to basically say, okay, on a time frame of 20 years, ending in December 2016, this is where the movements that the Russell was making in a percentage form, and it tends to, like I said, bottom here in the January, February timeframe, and then get a bid going up from there. So we'll see if that continues on. We finally have some, I have updated now the active trading to date file for strategies 1, 2, and 3. And so we're up 6.7%. Strategy 2 is working wonderful. The BABA trade really helped. Well, it basically helped jumpstart that, but we're looking at strategy 2. This is our, strategy 2 is primarily our income, weekly, monthly income strategy. And as you can see, my target is somewhere between $500 to $1,000 per week. And at $2,100 through the first 4 weeks of the month, we're right there at the $500 a week aspect. In 2017, here was our win-loss ratio for the strategy 1 and strategy 2. Here are the trades we actually closed for the week. The BABA trade, we got into that at 184.65, sold half of it at 190. So the second half, when it reached up to 199, and as you can see, it's gone up further today, further than that today. But it was about a 7 almost 8% gain in a very short period of time. Total profit on the stock, 681. Total profit on the option, doing a similar type thing, 1265. Tesla got banged out of the Tesla trade, kept a really short leash on this one, which was a good thing. So on our Tesla trades have been going okay with strategy 3, and we've basically, because Tesla has been so volatile, we have not gotten hit for the max loss on it at any time, and so it is actually up for the year. BABA did well for the week. We opened this 2 February. Sold 2 February 283 puts on the SPY for $1.44. Those are going to expire next Friday, so that's working out well too. And now we're just waiting for a catfish special. After we had somebody, Gary, put in a catfish special, potential catfish special over the weekend. It was OLED, and we're going to be looking at another one here also. So for the SPY, our SPY strategy 3 trade is up 24% so far year to date. Tesla's up 2.85, and BABA is up 22.09. Now we will have, and I'll be covering that in the next hour, we will have special trade criteria for doing BABA and Tesla going into next week, because Tesla has earnings. I've got basically 3 earning trades we'll be looking at next week. 1, Tesla and NVDA pre-earnings, and then strategy 3 BABA trade with earnings being on the 21st BMO before market opens. We will be looking to get in and sell premium, a strangle on the BABA going into earnings. Let's see. Okay. Just to highlight what we've changed here on the go, no-go table, one is we've brought in a couple of the entities that more accurately reflect the leveraged ETFs, and the leveraged ETFs are now listed. The one on the left is the bullish, the one on the right is the bearish, or the inverse ETF. Coming on down here. I want to thank Eric Gellum for letting us know about JNUG and JDust. They go up about a third more than the nugget and or the dust that we were trading, and so we'll anticipate those doing well. Let's see, Tesla. So nothing triggered last week, as you can see. One thing, hey, avoid distraction of watching too much. Right here we have 7 ETFs. Right now we have 5 core stocks that we're watching. And that 5, so that equates to 12 entities that we're watching. When you start getting outside of that range, I mean, you may be a Superman or a Superwoman and can do that, but if you're working for a living, you need to hone this even down further. You may want to just look at 1 or 2 or 3 and learn how to trade it really, really, really well, so it becomes a go-to position for you. So you can go to that position and trade it again and again and again and again and again, make money. Okay, my Lexus, trading Tesla for Lexus. As you can see, I am still going forward this trade, but I'm going to keep you posted about how I'm doing. And I'm not, sending out all these trades to everybody, but I'll tell you right now, I started with $5,000, and I got whacked a couple of times on a couple of spread trades with Tesla, and so my capital is down to $4,233. So, this lesson in compounding, I'm going to remain positive that it will be a positive lesson on the lesson of compounding, and not the flip side of the bad lesson of the two-edged sword of a leveraged option trades. And so I'll keep you posted. Here's where we're going with that. Our other strategy 2 trades have been working out fine, but so here we go. Okay, 2018, looking forward to a year of breakthrough and restoration. So 1, keep the egg growing, trade wisely, trade profitably. You can catch me at on Facebook at Active Trend Trading, Active Trend Trading, or on Twitter at trend_DWW. And here's my email, here's my phone number, here's the website, and I want to show you. I promised I would show you a couple of things. And here are some charts I want you to keep an eye on. Russell. Well, one is the Russell, if this remains a shooting star on the weekly going into this week, and that may give us a trigger to the downside. We'll see. At some point, the entities are going to revert to the mean. So let's go over here to JDust. JDST. And I want to show you a couple of things that I'm looking at. One is, okay, now JDust could in fact just fall completely through this area, but as you can see here, it is close to this buy zone. I'm going to call it a buy zone, or a bounce zone is what I'll call it, because basically when it gets down in here, it bounced last time, and it bounced again today, so or this week. And so I'm looking for a potential entry somewhere between where it's at or down here. It may not get back down to where it's at, but I'll be watching this intraday 1-hour chart for when I may get a potential entry to get into JDust. What's the upside of JDust? It looks like it wants to turn things around. If the TSI on a weekly chart does in fact tick up, like over the next couple of weeks, we could get a rebound up from there. Remember, gold actually tends to go down from the February through about the into May timeframe. So we may get a nice bounce here on JDust. I like JDust right now better than I like JNUG, because as you can see, JNUG just had a big sell-off here, and go back and just take a look at the gold miners to see how they are doing, and the gold miners GDX, excuse me. Okay. It has gotten up into a resistance area, has not broken that up to longer term. I like gold long, but up until until we get to that, we may get a real quick rebound in JDST, and so that's what we're looking at. What else do we want to look at real quick? Let's take a look at this monster, Tesla. Okay, Tesla basically broke down on I think it was yesterday. Yeah, broke down yesterday, and actually was breaking down all 4 days. 4 days of this week. Got a little bit of a bounce here off the 335. Now it is in a bounce zone. However, it may just bounce. If it bounces just back up to the past resistance and then rolls over and falls, that's telling us that, hey, it's going to spend some time in here. And remember that, Tesla gives us the opportunity. The range on Tesla today is $6.54. The range for Tesla for the week is $24. And so that weekly and daily ranges gives us some opportunities to do some things, but we have to make sure we're on the right side of the trade. My error this past week when I traded this to the upside selling a put was I took this TSI tick up off the intraday chart. However, my weekly chart, it was basically saying, no, this is still heading down. Momentum is still coming out of Tesla, and therefore it's not, it may do some bouncing, but it's still, its predominant inertia is in fact down. So we'll keep an eye on that. I've got something going on here. Oh, awesome. It's I don't know if you guys heard that. That was the Marine Corps hymn, and I think it was because Jay Dust is in the process of popping back up. So, and if you trade in either one of these gold entities, let me tell you, guys, they and ladies, they move really, really, really fast. I mean, you go down here, we click down here, and from here up to here, it's about a 14% run in a couple of days. And so it is fast and furious. And so, buckle up and keep your, you want to get buy as close to your bounce zone as you possibly can and sell close to your bounce zones on the other side. So if I were in a position that, in here that I jumped in either here or down here, where's my jump, my bounce zone on the flip side of this is basically up here where this congestion is. And I would just simply, I would highlight an area. And let's say I like this area here. I would just highlight that and say, okay, hey, that's where it ran into past resistance. But let's say I want to get a little bit more than that. So up into that area, this past high. And again, that's just the move it's done today. It's not done moving. It's not done moving today, but just what it's done today. It moves more than some stocks move. Okay, it's gone up almost 6%. I mean, it had a 6% move today, so that's pretty wild. And so let's see what else. What was the last thing I want to cover with everybody? Let's see. NVDA also earnings coming up. And Tesla earnings coming up. And what I'll be looking for is I would like to see Tesla. Tesla earnings is coming up on the 7th after market closes. If I extend this this basically this TSI going down, where does it get to its typical reversal area? This is something that is, so basically just to apply some geometry to this, extend it down on the same type of path the other line is going on. And then you can say, okay, it tends to get down to the negative 20, about 2-1. So when's 2-1? That's next Thursday. Now, if it reverses earlier than that, or if it gets back down here and retests the 335 level, then it may bounce earlier, because it also could get down here to the 0 line and also bounce. Well, when does it get to the 0 line? Well, on 130, which is next Tuesday. So just a little, couple of ways to use that TSI, in a way to give you some predictions on where things timing-wise. Okay, NVDA has been going great guns, 2.8 after market. And again, it needs some kind of a pullback into the moving averages to get a potential bounce into earnings. Because right now, everything is really extended. So how would you want to play this off of off of an intraday chart? You could wait for the TSI to get back down here about the 0 line, and for this to pull back into a breakout area, because we had another breakout here, and which was about the 240 level. So, but I like it back down at 237, 235 level, actually more. So let's see, a couple of questions. How about your address? My address goes out with all my emails, Scott. My address in Hawaii, yes. And so, yeah, hey, Bob, I'll be talking about the SPY trade during the final hour. And right now, we're just about ready to go to that final hour. So I hope you like the concept with the J-Dust. And again, I would like to get it back down to the reversal area or the bounce zone, to potentially go into a position on that going into next week. At least that's the plan. Because if it does bounce there and then goes on and runs, how far might it run? I'm going to go back and just cover this one last time. And then, like I said, this will probably be, when it triggers, I will probably put this out as a one of our bonus trade setups that everybody who's a active trend trader can take advantage of. If this in fact is a reversal off the weekly, then where might it run? Well, it might run all the way back up to that area. So how far is that? Well, from where it's at right now, that would be about a 61% gain, back up to the 75 level, or if you got it to the 70. But you're going to start hitting that bounce zone from that past high at about the 66 level. So that's about a 40% gain. And they tend to happen fairly quickly. So we'll keep our eye out for that one. So with that, I'm going to bid everybody adieu. Have a absolutely wonderful week. Remember the aftermarket Mondays on Monday. Join, because that gives, we'll be talking about, hopefully we're talking about J-Dust. For premium members, the final hour starts the top of the hour. And so until next Monday, aloha, trade well, and prosper. Aloha, everybody.